My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to help you make some money. My job, not just to entertain, but to educate and teach you about days like today. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. We shouldn't trust the rally. It has to fail. You will lose fortunes. Do you know how many times I've heard that over the last 40 years? Yet only twice in my entire career, the dot-com collapse and the Great Recession, was the rally actually not to be trusted. And that's how the Dow went from 863 when I started in this business to 33,592 today. If that isn't proof positive, I don't know what is. But still, there's a preponderance of critics who see this move as yet another phony advance, including today where the Dow gained 56 points, S&P climbed 0.87%, NASDAQ surged 1.45%. This morning, we had the Dow soar 450 points almost from the get-go, based on a fantastic quarter from Walmart and a cooler-than-expected producer price index number. It was up 0.2% for October. We were looking for 0.4%. A soft PPI is often a great indicator that inflation has peaked. But something else happened, and frankly, it was totally amazing and totally in keeping with my theory that excessive skepticism about rallies has cost people fortunes by keeping them on the sidelines, even in the face of bullish news. See, yesterday, President Biden met with President Xi from China. Wall Street yawned. Traders just didn't think the 3-hour meeting moved the needle at all. Most tech stocks finished the day down after the late afternoon meltdown, and it seemed like everybody was once again betting on a tech recession, and China wasn't going to help. Sell. But that sure wasn't the reaction in China. Maybe because they're starved for good news over there. Chinese investors loved the meeting, and they showed their love by setting their stock market soaring. I think people in China remember when America used to be a much bigger buyer of their goods, and they see the meeting with Biden as a reopening of the Chinese market. Hey, maybe they finally need us as much as we need them. The rally in Shanghai quickly reverberated back over here, leading to a jump in any American tech with even benign exposure to China, especially the semiconductor capital equipment makers who've been punished by the U.S. government because, their products had to be banned from being sold in China or the intellectual property because a lot of it was being used for the military. It doesn't matter that Biden and Xi didn't even discuss the semi-issue, and there's no reason to think things have gotten better at all. The stocks acted like we're on the verge of a big deal, though. Aided totally by a left field, just a shot to left field by Warren Buffett, a gigantic bet on Taiwan Semiconductor, the huge Taiwanese chip manufacturer we're also worried about. Where did that come from? So what do we have here? We had both the industrials and the techs rally. And once again, it looked like yesterday's late-day sell-off was a pure fake-out. By the way, Walmart was one of the stocks that let us lower yesterday in that bullish decline. It went from, it was like 330, it was like up $1. It finished down 4. But today it rocketed higher, soaring 9 points in the wake of a fantastic quarter and taking the rest of retail with it. You know how these ETFs will link everything, even as the fine print indicated that non-food sales were actually less than ideal. And the month-by-month cadence didn't seem strong to me. Now, here's where it gets really interesting. Now, you'll really like this. As both the NASDAQ and the Dow were rising, something terrible happened over in Central Europe. We got reports that Russian missiles had landed in Poland and killed 2 people. Now, Poland is a member of NATO. What you need to know about NATO is that it's an all-for-one, one-for-all alliance, which means our government could easily use this provocation as an excuse to directly attack Russia in Ukraine. Now, that's something like the Bay of Pigs crisis, 1962. It's like the Cuban Missile Crisis. I mean, this is bad news. So it caused the Dow to plummet from up more than 100 points at that moment to down 216 at its lows. But you know what? It barely bruised the tech stocks. As the owners of these were still basking in the glow of the presidential meeting that they didn't even care about 24 hours ago, and accelerated the oil stocks that had been merely hovering until the missile story. And you know I like the oil stocks. We own a ton of them. for the Charitable Trust, and we're going to be talking about them heavily at our Thursday club meeting at noon. Later in the day, the averages bounced back when we got reports that the damage actually may have come from Russian missile fragments that were shot out of the sky by Poland's missile defense system. Mind you, all of this occurred in the face of real uncertainty about the composition of Congress next year, and of course, not to mention the extraordinary collapse of all things crypto, where the apostles of trash tried to salvage their wealth from the digital waste management landfill. Kudos to Scotty Wapner, by the way, for an amazing interview with a fellow by the name of Pomp. Boy, those guys, they're just vociferous in their love, even in the shape of disaster. Now, I point all this out because the market hung in there, even in the face of some incredibly negative headlines, including the possibility that Home Depot only made its numbers via inflation, and Walmart made them because of good food sales. Bad news for less food-dependent competitors. I mean, for instance, like Target. How is this possible? First, because the gentle producer price index number might be enough to make the Fed slow down the pace of its rate hikes. That jives with the lack of transactions in housing and the astounding jump in credit card debt that, I got to tell you, Brian Sullivan talked a lot about that this afternoon. Second, and more important, it comes down to what we call the animal spirits of the market. While the averages have spent the last 40 years steadily moving higher, occasionally we get what I call course corrections. Quite simply, what needs to happen in order to fix the economy, to calm inflation, will inevitably happen. It just takes some time, aided, of course, by better Fed chairmen like the one we have now, Jay Powell. For example, when you look at the makeup of the producer price index, it's clear what happened in this country. We had way too much of a happy days are here again moment as we moved beyond COVID, and then it came right after a darkest before dawn moment. Or to put it in business terms, we were headed for a COVID-induced recession, so the government gave us a lot of money, and the Fed slashed interest rates to zero, which then caused the economy to explode. Problem is, it worked too well, especially once we got to working vaccines much faster than most experts expected. Suddenly, we were past the pandemic, and the consumer was flush with cash. That led to an incredible inflationary buying spree, including of stocks, that's now running out of juice. At the same time, rates are rapidly rising. Logistically, almost no industry was ready for the buying onslaught. If we can see the end of the purchasing spree, which includes houses, cars, big-ticket items, the stuff you buy at stores, because the stimulus has run out and we can't afford sky-high credit card debt and ballooning mortgages, it's a huge positive for stocks. It helps that we've finally worked out the kinks of the supply chain that were creating shortages all over the place. Put it all together, and there's a real possibility the Fed can indeed engineer that fabled soft landing for the economy. I think all this deflation will be aided by some very weak apparel, hard goods, and toy sales, huge categories going forward. You got to understand, October was an extremely weak month for retail in this country. There are promotions everywhere. Even Walmart put on a good show, but I didn't get any comfort about the last month, and I don't have any comfort for the next month. Remember, Walmart is lower end than, say, Target, which could have a much tougher time. I'm not sure if it's the tech layoffs, the end of the stimulus, which includes the child tax credit, or an overall sense of fear or even doom, but I do think things have clearly gone awry. It's just awry enough to make it so the Fed slows down the pace of its rate hikes to the point where we still feel more pressure, but we don't get a recession. That's the holy grail. No matter what, I reiterate that October was bad enough that I don't think the retailers can bounce back from a very promotional November and holiday season. Good for Ollie's, great for TJX, which the Charitable Trust owns, terrific for the consumer, amazing for the Fed, and therefore perfect for investors. The ultimate bad is good Christmas story. Bottom line, even as the news backdrop is far from positive, it's striking that investors have a positive bias 1 year into the downturn, despite the fact that the bears keep telling us not to trust our lying eyes. Hey, how about we go to my home state? Let's go to Bob in New Jersey. Bob!
Hey, Jim. I really enjoy your show, and I just wanted to acknowledge that, every morning you, David, and Carl do a terrific job, so thank you.
Oh, thank you. Thank you. I couldn't keep myself from that show today. My wife said, "What are you doing, man? You have the morning off." I said, "That means nothing to me. Nothing. I'm going right back on. How can I help?"
Hey, Jim, with a recent pullback in this particular stock, PE around 26, I was just wondering what your and a great performance record, by the way. I'm just wondering what your opinion would be on whether I should take up and add to my position of UNH, United Healthcare.
Okay, the healthcare stock's a little bit weak here. UNH and Humana, which the Charitable Trust owns, have come in for the last couple of days. Let these come in more. UNH is a very, very good company, but I don't want you to get trapped. I think it's got a few more points to the downside. Even as the news backdrop is far from positive, it's pretty striking that investors have a positive bias 1 year into the downturn, isn't it? Oh, man, money tonight. Is Walgreens Boots Alliance the retail turnaround story that investors have been craving for? I'm taking a close look at the stock. Then, given some positive inflation news, which sent the market higher, has this tape finally shaken off the worries and is ready to continue heading higher? I'm going to the charts to find out. And then, some special visitors stopped by the exchange earlier today. I'll be answering their most pressing questions.
This is Cadet Jacob Gurley with the West Point Finance Club here at the New York Stock Exchange, and we want to say, Go Army, beat Navy!
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.